InvestEngine doesn't get the same hype as Trading 212, but quietly it's been building a reputation as the go-to broker for ETF investors in the UK. Some see it as the best kept secret in passive investing, while others think it's just Vanguard with a facelift. So, is InvestEngine safe? And is it actually the cheapest and simplest way to invest in ETFs, or is there a catch hiding in the fine print? Let's break it down. The fees, the pros and cons, everything. Grab a cuppa and let's dive in. InvestEngine is about as no frills as it gets. The platform is clean, minimalist, and completely focused on ETFs. No single stocks, no CFDs, no crypto, just good old ETFs. And honestly, that's kind of refreshing. If you want simplicity without the shiny distractions of meme stocks or risky leverage, this is your playground. Here's where InvestEngine shines. You can buy and sell ETFs without paying a penny in trading fees. Unlike Trading 212, there's no 0.15% foreign exchange charge when you buy non-GBP denominated ETFs. No account fees for DIY accounts. However, if you want their team to manage your money, the fee is just 0.25% a year, cheaper than robo-advisors like MoneyFarm, Nutmeg, or Wealthify. And that's pretty much it. No setup fees, no deposit or withdrawal fees, no inactivity fees, no ISA or SIPP fees. It's like walking into a pub where for once the menu actually matches the prices. Now, you might be wondering, how can they make money if DIY investing is free? They're very upfront about this. They keep costs low by batching all ETF orders once per day. So instead of hundreds of tiny trades, orders for each ETF are grouped into a single buy and a single sell per day. For SIPPs, it's batched separately with other SIPP accounts. They then use something called the retail service provider model, basically sending the grouped orders to brokers who compete to offer the best price. That keeps spreads tight and costs low. If you're someone who trades frequently or is more active, this could be a small inconvenience, but it saves you money. And this ties back to InvestEngine's philosophy: long-term, efficient investing with a focus on keeping costs low. They're not trying to get you to trade constantly. The whole platform is built for patient investors. On top of that, revenue comes from account charge on managed portfolios and life plans at 0.25% a year, interest on uninvested cash, which they keep so they don't pay you interest, and paid partnerships with ETF issuers. So yes, DIY investing is free. Now, moving on to the investment products available. InvestEngine is laser focused on ETFs. Over 830 ETFs, UK, US, global, dividend, ESG, bond ETFs, commodities, you name it. You can choose a DIY account where you pick the funds yourself, or allow InvestEngine to build and rebalance your portfolio for you, tailored to your risk profile or long-term goals. But remember, no stocks, no CFDs, no crypto. This is ETFs only land. If you're finding this helpful so far, don't forget to hit the like button and subscribe for more investing content. Thank you for your support. Now, for the accounts available. InvestEngine offers 4 account types: a general investing account, a stocks and shares ISA, a business account, which is rare, but great if you invest via a limited company, and lastly, a SIPP, or self-invested personal pension. That already beats Trading 212, which still doesn't have a SIPP or business account. The minimum to open an account is £100, with top-ups from £20 via instant bank transfers, manual bank transfers, standing order, or direct debit. ISA allowance is capped at £20,000 per year as usual. A few nice touches that make InvestEngine stand out include fractional investing. So you don't need hundreds of pounds to buy into pricier ETFs. You can set up a regular direct debit and your cash is automatically invested. You can create multiple pots, set your own holding weights, giving you more control, almost like Trading 212 pies, but stripped back. Auto rebalancing for managed portfolios and life plans. Then there's portfolio analytics, giving you clear visibility of your holdings by ETF, region, and sector. InvestEngine also offers complimentary investment news, webinars, and research tools. Then there's themed ETF lists. So ETFs are arranged in lists: dividends, ESG, emerging markets, commodities, and so on, making it easy to find funds. And finally, SIPP transfers available from certain providers. At the time of recording, Vanguard and Hargreaves Lansdown SIPPs can be switched across. But keep in mind, no debit card, no banking features, no crypto, just simple long-term ETF investing. Like Trading 212, InvestEngine is FCA regulated and FSCS protected up to £85,000, and client money is held separately from company funds. So your investments are ring-fenced, exactly as you'd expect from a serious broker. Now, here's the amber flag. InvestEngine is still loss-making. In the year to March 2024, they reported a £5 million loss, but that's pretty normal for fast-growing fintechs. The good news? Customer numbers grew 65%, assets under management more than doubled, and revenue was up 4x while costs grew slower. So, yes, still unprofitable, but scaling fast. Lastly, customer support is mainly via email, but they've built a few extras: a community forum where users help each other, an active X or Twitter account for updates, a dedicated switching line offering up to £100 for transferring your ISA or SIPP. And the reputation is solid. They've won multiple awards, including Which Recommended Provider for Stocks and Shares ISA 2025. On top of that, they have a 4.5-star rating on Trustpilot, which is one of the highest in the UK brokerage space. Let's go through the pros. Free ETF trading, so no commissions and no foreign exchange fees. 0% fees for DIY accounts, just 0.25% for managed and lifetime portfolios. Automatic rebalancing for managed and life plan portfolios. Fractional ETF investing available. Access to 830 plus ETFs from across the UK, US, and rest of the world. SIPP, ISA, and business accounts. Super simple ETF only focus. Mobile app and web platform access. Auto investing feature for a hands-off experience. Award-winning platform with a 4.5-star Trustpilot rating. FSCS protected and FCA regulated. Complimentary research and educational content to support investors. And the cons? £100 minimum to open an account. Limited to ETFs only, so no CFDs, no stocks or crypto. No debit card or banking features. There's no watch list. No interest on uninvested cash. No junior ISA or cash ISA. No live chat or direct phone support. Basic trading functionality. So no limit orders, stop loss or market orders. InvestEngine is still unprofitable. So, is InvestEngine worth it? If your goal is low-cost, long-term ETF investing in the UK, then yes, it's one of the best options out there. But if you want single stocks, crypto, or flashy extras, you'll be disappointed. Basically, if Trading 212 is like Lidl, with its flashy promos and wide appeal, InvestEngine is like Aldi, stripped back, low cost, and focused on essentials. If you found this helpful, don't forget to like and subscribe. It really helps the channel grow. Let me know in the comments if you use InvestEngine and what your experience has been. And if you want to compare it to Trading 212, check out my review here. See you on the other side.